Is on Facebook. Why term life insurance instead of whole life insurance? What's the difference? Term life insurance is just insurance. That's all it is. It's like your car insurance. It's all you get. You don't get any money unless you die. And so you don't ever get any money. It goes to your beneficiary, right? The only way it pays off is when you die. The only way your car insurance pays off, you don't make money on your car insurance, your homeowner's insurance. That's pure insurance. That's all it does. It doesn't have any gimmicks or bells or whistles that has an investment built into it. Or you can buy cash value life insurance, which includes whole life or universal life or variable life. Now, here's the typical numbers, okay? The typical numbers are for $5, you can buy as much term life insurance on a 20-year level term as you can for $100 buying cash value life insurance per month. So why would you pay $95 more per month? Because it builds up inside of it a savings account called cash value. It builds up a savings plan so that then later on, if you close the policy, they will write you a check and give you your savings back. So you buy insurance in a sense for $5 and you invest $95 out of every $100 per month. So why is that bad? Well, it's bad for a multitude of reasons. Number one, the rate of return on the typical whole life policy is around 1%, about like your stupid savings account at the bank. And no one builds wealth at 1%. On a universal life, after all the fees, now they quote you a higher rate, but after all the fees, your net is around 4.7%. These are all documented numbers. And on a variable, which has mutual funds in it, by the time the mutual funds get through the hallways of the insurance company, what should have been a 10 or a 12% rate of return ends up looking like about a 6% rate of return. So they hit you heavy with the fees. If you want your money out of your, quote, savings account, out of your, quote, investment, there's only two ways to get it. One is cancel your policy and lose your insurance, or two is borrow it. Now, wait a minute. You're going to borrow your own money and pay them interest to borrow money you put into an investment. Well, that's stupid, but people do it all the time, and people that sell this crap act like that's tax-free return. It's not tax-free. It's borrowed money, and you're paying in interest to an insurance company to get your own stinking money. But here's the worst thing. Let's say you buy like a couple of $100,000 policy, and you pay into it, and you pay into it, and you pay into it, and you pay into it. And finally, it gets past all these fees, and there's $100,000 in there, and you die. Your cash value is $100,000. Your face value is $200,000. You die. You know what they pay? $200,000. They pay the face amount. What happened to your $100,000 that you paid $95 per $100 a month extra to build up? Well, we don't know. Apparently they keep it. So you have a savings account with a lousy rate of return that when you die, they keep your savings. That's whole life insurance. It is one of the worst financial products in the world. It is the payday lender of the middle class, without a doubt. And the people that sell this stuff should be ashamed of themselves. It's absolutely horrendous. It's sad. And, here's what's really sad. They are really good at selling it. Well, term insurance, your term insurance is going to run out about the time you die, and your family's just going to be left with nothing. And, do you rent your house or do you buy your house? Well, you're buying your policy. Well, you're not buying your policy with whole life. If you quit paying it, you know what? They'll cancel it. You quit paying your term insurance, they'll cancel it. You don't build up equity in this. You are buying equity after they picked your pocket. Some of it builds equity called cash value, but you still lose it all when you die. And so it's absolutely ludicrous, the whole sales process. And, here's the thing. It's 20 times more expensive for the same amount of life insurance. And guess what the agent gets paid their commission on? They get paid their commission on premium. So the agent gets paid on $100 rather than $5 for the same amount of life insurance. And so what ends up happening is people buy this crap and they don't buy enough life insurance to take care of their family, and then they die with these stupid but tiny little whole life policies that are a tenth of what they ought to be. So you ought to have about 10 to 12 times your income on you. Meaning if you make $50,000 a year, you ought to have $500,000, $600,000 in life insurance on you. You die, your spouse takes that and invests it. If they make 8 or 10%, then they're creating $50,000 a year. And you've been replaced. That lump sum investment will pay your family what you used to earn before you died. And it's that simple. And, you know, it just doesn't cost anything. Term life insurance is very, very inexpensive to get the proper amount. And this is why I have endorsed term life insurance from the very first day I turned on this microphone 25 years ago. I'd never buy cash value insurance. It's absolutely an antiquated, crappy product. And it's all about them making money.